Ecommerce, where we help Shopify and Amazon sellers transform the accounting and maximize profits in their business. Today, I'd like to talk to you through 4 common reasons why e-commerce businesses fail and what you can learn from it. It is a sad fact that many new businesses fail. In reality, according to the US statistics, more than half of them close within 5 years. And there are many reasons why these businesses fail, but there are 4 common themes that arise time and time again for businesses operating in the e-commerce space. In this video, I'm going to take a closer look at those reasons and dive into the lessons you can learn from them so that your e-commerce business stays successful. The most common reason, number 1, is not understanding cash flow. Cash is the lifeblood of your e-commerce business, and without it, you can't keep moving. This is why it is so important to have a good understanding of your cash flow and make sure you have enough money coming in to cover your expenses. First of all, you need to understand the difference between cash flow and net profit. So cash flow is the money going in and out of your organization. Cash comes in form of customer payments and goes out in the form of expenses such as staffing cost, inventory, materials, packaging, power usage, or rent. Positive cash flow means that more money is coming in than going out. This means that you will have plenty to cover your expenses and keep your e-commerce business afloat. On the other hand, negative cash flow means that you are paying out more than you are receiving, and thus your business bank balance is declining. As well as permitting you to continue operation and protecting you against debt, a positive cash flow allows you to grow and scale your e-commerce business in the future. The next common reason for failure is running out of cash. It is possible for an e-commerce business to be profitable but lack adequate cash flow, especially if your products go through a long sales chain, which may be the case if you also sell business to business. You may have to pay staff and suppliers before your customers pay you, and it's not uncommon. And consequently, you might not have enough available funds to continue operating. This can lead to a loss in revenue or may cause you to accumulate debt. It is okay to have a negative cash flow in the short term, if you have sufficient reserve, of course, but it is to be expected as you scale up and invest in growth. However, if this goes on for too long, you will run out of funds and you may have to cease operation, unfortunately. So if you are having trouble managing your cash flow, here are some tips. Create a detailed and realistic budget. Track your spending and revenue closely. Find ways to reduce your operating expenses. Even small changes add up, so you shouldn't ignore it. Get a loan or line of credit to help you tide over difficult times like we are experiencing nowadays. And invest in software like Zero Cloud Accounting that will help you manage your finances more effectively. The next reason I would like to talk about is lack of forecasting. That's another common reason why e-commerce businesses fail. You should regularly prepare your cash flow statement so that you can clearly see how much money is entering and leaving your bank accounts. And this will allow you to create cash flow projections to help you manage money well in the future, particularly during periods of growth. This will also help you to prepare an adequate safety net for any unforeseen costs that might crop up, and it happens quite often. You should automate your cash flow forecast with the use of third-party applications. And this will allow you to eliminate a lot of manual work and run more detailed calculations and forecasts. Some great apps that work with Xero are, for example, Float, Cash Flow, Forecasting, Spotlight Reporting. These are the ones we would recommend. You should revisit your forecast on a regular basis. Weekly or monthly really is enough, works great. This will allow you to create comparative reports so you can see if you are on track and how your business is performing. And the last common reason for failure I'd like to mention during this video is confusing turnover with profit. That's a big one, and we see many e-commerce businesses owners confuse turnover and profit. But it is vital to understand the clear difference between the two. Otherwise, you may find yourself in a whole host of financial trouble. So let me explain that to you quickly. Turnover is the money you take, is the amount you generate from sales over a specified period of time. Turnover is also called revenue, and it is one metric that can be used to measure the health and performance of your business, but it's not the same as profit. On the other hand, profit is the money you make. So it is your turnover minus your costs. It is crucial that you understand this in order to maximize profits in your e-commerce business. Of course, increasing your turnover can boost your profit dramatically, but you shouldn't automatically assume that this is going to be the case. Furthermore, confusing turnover and profit encourages overspending because it leads you to think that you are making more money than you actually are. This in turn cuts into your profits and can land you in a lot of debt, which will hurt your growth and can even lead to business failure. So understanding the difference between turnover and profit gives you a clear picture of how much money you are actually making and how much you can afford to spend. In addition to this, it allows you to understand which costs and practices generate the largest return on investment. And therefore, you can cut down on costs where appropriate and further increase your profit margin. Just to summarize quickly what I have talked about today, there are many reasons why e-commerce businesses fail. But by understanding the most common ones, you can take steps to avoid them. So make sure you have good understanding of cash flow, so you don't run out of cash suddenly, have proper forecasting tools in place, and remember to focus on profits rather than revenues. These are the keys to success. When you are ready to make profits and be stress-free and enjoy life, here is how you can get help. Let's jump on the phone for a quick call and brainstorm any challenges and you see and if we can possibly help you. This is a quick 10-minute call and it is to help you get clarity and a plan. In order to book your call, just click on the link below this video. That's it for today. Many thanks for watching and I hope to see you in the next video. Bye for now.